Test, 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 test. Hopefully you can hear me. Hi all, and welcome to another edition of What's Moving the Markets with FxPro. I'll start the broadcast properly in a couple of minutes. My name is Phillip Konchar. I'll be your presenter for today, and hopefully you can see the screen with FxPro PowerPoint in front of you. So let me just try and get into the chat for a second, and then we can. Okay. Okay, just checking to see if you can hear and see this. Hi all, can you hear me? Test, test, test. Can you see this? Can you see the screen? Okay, so big hi to everybody who's attending at the moment. I would like to welcome you to another edition of FxPro, What's Moving the Markets webinar. My name is Phillip Konchar. I'll be your presenter for today. I'm just repeating this again because I can see more people logging in. I'll wait for a couple of more minutes. While we're doing that, I'll go on to the disclaimer page. But in the meantime, if somebody can just answer to me, if you can see my screen properly and if you can hear me, that would be really, really good. So big hi to Amos, Andres, Ben, Brian, Dave, Hans, Henk, Hugh, Yannick, John, Carol, Michael, Mike, Nick, Nino, Percy, Richard, Robin, Sebastian, anybody? Excellent, brilliant. No sound. Test, test, test. Test, test, test. Can you hear me, guys? Just checking, can you hear me? Yeah, okay, so no sound. Hank, can you please check your speakers, your audio setup? Excellent, brilliant, guys. Now let's keep this fairly informal and engaging. So feel free, ask questions as we go along. The whole idea for this webinars is, if you've seen them before, you are very much familiar. They normally start with some sort of disclaimer. Okay, so disclaimers are basically provided by your broker, in this case FxPro, and they're quite important to read, because anything that we discuss here should not be seen as advice, and it does not take in consideration your personal circumstances and your personal investment and also trading objectives. So now this is me. Basically, all I'm trying to say is, because we'll go into live markets, we will definitely look into some levels that are currently developing in the markets, prevailing trends, breaking news, economic calendar, fundamental data, all sorts of other stuff like that. And if I do get excited a bit and I start talking about levels and uptrends and downtrends and so on and so on, basically what I'm trying to tell you is that these are my opinions and experiences, that these are not, it should not be considered to be advice of any sort. So all of the material is available in the public domain, and we are doing this for the educational purposes for you, if you're new, if you are, sounds like your microphone is very far away from you. Ah, okay. How
about now? Test, test, test. How about now? Is this better? Much better? Oh, brilliant. Thank you. Thank you for letting me know, Ben. Thank you for letting me know, Ben. Excellent, excellent. Okay, I've just switched to a different feed. Okay, brilliant. Thank you. Thank you for letting me know. So, the last thing that we can talk about as well, these are some golden rules for new traders. I'm not really sure if you are new or experienced traders, but you know, these kind of rules are always good to read. They're good to refresh yourselves, even if you've been trading for a while. And the first one is never add to a losing trade. Never lose more than 1% of your trading capital on any one trade. Manage your risk. Never trade anything you don't understand 100% of the time. This is crucial. Loads of people come to trading and they just jump from one market to another because it's topical or exciting, rather than really trading it because they understand what's moving it, what's triggering it, where is the value for that market or a product. Only look for low risk, high reward trades or high probability setups. When you don't have signals, don't trade. So you can be short, long, and you can be in cash. Cash is a position as well. Don't forget that. Now, what I'm trying to say is go and look for a disproportionate amount of potential reward for the risk that you're willing to take. In that case, you are managing your risk exposure in a fairly aggressive way. So therefore, you can afford to be wrong over and over again and still stay solvent. And then when you're right, hopefully you're making much more than what you lost on all of your losing trades combined. That's the basic premise of this sentence. Trade your plan, your system, your signals, the chart, the price action, and not your opinions, bias, or prediction. Loads of people have a firm belief that they know where the markets should go or will go. Okay, even if you are eventually right, you might run out of time. The old saying is going, markets can stay irrational for so much longer than majority of the people can stay solvent. So rather than trying to pick the ultimate low and ultimate high, identify the trend and trade in a direction of that trend, because by doing so, you are increasing the probability of potentially being right, rather than doing counter trend trades. It's only giving you a bit of an edge. Find a trading methodology that fits your personality. We all have different personalities, different lifestyles, you know, so not everybody is suitable for a very frequent intraday trading based in 15-minute or 5-minute or 1-minute time frame. Some people make more money doing end of day trend following. Some people are more suitable for trading in 4-hourly and 1-hourly time frame, trading and placing swing trades, and so on and so. Identify the methodology and the system that fits your personality and your lifestyle. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. This is hugely important. Always ask yourself, why did I initiate this trade? Did I get the confirmation that I was looking for? Did the price come to my level that I was looking for? Did I see this setup before? Was that setup tested, hopefully in a demo environment over a long period of time, which provided me with a possibility of predictable outcome, positive outcome in my favor? Without all of that and appropriate risk management, it's becoming wild guessing, and that's not trading. Trading should be business-like, repetitive activity rather than something that's exciting and done just for the sake of it in the spare of the moment. The size of your wins and losses determines your trading success. Lose very little, let your winners run. Majority of the people, when they come to trading, especially if they're new, they tend to cash in their winning trades very quickly. So it's very important to allow them to run and for you to achieve your desired risk to reward ratio, which is hopefully much larger than the risk that you're willing to take before you enter into a trade. Your risk management rules will determine the success of your technical trading system. The biggest frustration for majority of the traders come from their firm belief and expectation that their technical trading system, an indicator, a strategy, will give them a definite outcome. Although that strategy provided them with a good risk to reward ratio or a high probability setups that played out in the past, that does not necessarily mean that the very next trade will end up in the same way. Even if you're playing a 50-50 game where you're flipping the coin, the logic will say we'll have 5 heads and 5 tails, or 1 head, 1 tail. And we all know when we're flipping the coin, it doesn't happen in that order. So you might have 2 heads and then 3 tails, and then 7 heads and 1 tail, followed by, 8 of one, 2 of the other, and 9 of one and 1 of the other. It's random. It really is. So that doesn't necessarily mean in the same way that your next trade will be the outcome of the very next trade will be the one that you always got or got most of the time. But that also means that if you had a series of losing trades, it doesn't mean that your very next trade might not be a winning trade if you follow the same set of rules, and if those rules are based on some confirmations that you utilized in the past. Okay, so hopefully this is the boring stuff over and done with. If you need to contact FxPro, these are the contact numbers. Feel free, do so. Now, I'm going to remove this for now, and then we can go into a live market. So hopefully you're seeing the MT4 platform with multiple charts. Obviously, FxPro have a new trading platform, which is called the Edge. And it looks like this. It's mainly for spread betting, but I know loads of people are still very much comfortable with the MT4. So what I'll do is I'll use the combination of 2 different platforms to cover as much as I can. So what we have here, this is S&P, this here is Dow Jones, this is DAX, this is FTSE, this is gold, this is oil, this is euro dollar, sterling dollar, dollar yen, dollar CAD, Aussie dollar, euro sterling, and I'll try and cover anything that's topical. I'll go through the economic calendar and then we can go through all of that. So let me just check with you that this is all okay. Okay, let's keep this informal, guys. Let's keep it completely informal, okay? If you have any questions, just ask. Don't be shy. If you ask a question, thank you, guys. If you ask the question, it's quite likely that somebody else is thinking about that question as well, but they're just too shy to ask. So if you are asking a question, you're doing everybody a favor. Plus, I am sitting here in front of multiple screens, and I am talking to myself at the moment, and I'm looking at the screen. So I cannot see your facial expressions. I cannot see your body language. I cannot see you nodding or making a frown when you don't understand something that I'm going to say. So if you say something, it would really help. So I would encourage you to come in and it would encourage me to talk about something that's relevant for you if you come in and ask the question. Patrick is saying, why do you watch these markets and why this time frame? Excellent question, Patrick. Thank you so much for asking. Well, the reason why I'm watching these markets and why I have them all in front of you here is purely because they are very much liquid. They are frequently traded markets. They're popular markets that majority of traders who are trading Forex, who are trading indices, futures, oh, no problems, Patrick. Welcome. Thanks for your question. And And these are frequently traded markets and financial instruments, so therefore they're liquid, and they tend to react to what we are going to be talking about from the economic calendar point of view, fundamental data releases, economic data releases, and figures, and so on and so on. So that's why I have them here. This doesn't necessarily mean that I trade all of them at the same time. I might be trading this and something else as well. This particular time frame is because I don't know you guys. I don't know if we had the chance to meet somewhere in one of the live events at FxPro in London. If not, it would be amazing to meet you in person. But I don't know what time frame you trade. There could be a bunch of guys here who are completely new and trading in end-of-day time frame as investors or trend followers. There is a bunch of guys probably who are trading as intraday, more frequent traders based in 15-minute time frame, and so on and so on. So what I have here is I have everything in 1 hourly time frame. But what I'll do is I will start analysis for each of these instruments, or as many as I possibly can, using multiple time frames, and then identifying some prevailing trends and hopefully some levels that could be of interest to us from the resistance and support point of view, i.e. where the price might kind of find a bit of a support, or where the price might find a bit of a resistance, and so on and so on. Okay, so there is another question. Thank you guys for asking. It's really encouraging. I only trade on 4 hourly charts. I want to know what's the most common SMA used. I use 14 and 100. Okay. Percy, very good question. Majority of the people, I'm going to put this in writing as well. I don't know if you can see this, but yeah, the most common moving averages, and the ones that we have here on our charts here, is 20, 50, and 200. Majority of the traders use these 3 moving averages. Majority of the institutional traders use these moving averages as well. Even if you don't use them, it's good to keep an eye on them, because this will tell you where other traders might be looking, and therefore this might prepare you for the reaction of the price when it comes to that level. 200 period moving average is hugely important. 200 period moving average is all even mentioned by Bloomberg and CNBC and Reuters. Even fundamental analysts who think that technical analysis is a voodoo type activity refer to 200 period moving average, either simple or exponential, because in their books, anything that's above 200 period moving average is uptrending. Anything that's below 200 period moving average, it's is downtrending, and so on, long term. So let me just see a couple of questions here. Thank you very much. Michael is saying, Philip, what are your views on sterling dollar, as it seems to me to have made a significant move to the upside, and that the bull hold the balance of power at the moment? Good economic and Brexit news, and seems where are we now? Big players are involved given the volume, also has broken significant resistance levels over the past few days. The dollar is helping, but it's very weak. Dixie at very low levels. Excellent, Michael. We'll definitely be talking about cable, and it's one of the financial markets that I am hoping to cover right now. Agree with you as well. I am all in favor of stronger euro, especially against a stronger sterling, especially against euro sterling in particular. That's my flavor of the month. Please, what is moving euro dollar market at the moment? Excellent question. We'll be talking about that as well. If I'm looking at 4-hourly chart, does this 3 MAs reflect the trend direction for me? Also, depending on what time. Yeah. Also, the same question for RSI on 4-hourly chart. What figures would you suggest? Excellent. Now, let's start with something. Brilliant questions. Thank you guys so much for engaging. Now, let's go and check this baby first. Now, if you are using FxPro, you are probably very familiar that you have access to their FxPro economic calendar. Okay, and this economic calendar can be found on their landing page. So you can see the calendar for today, tomorrow, for this week, and also for the next week as well. So from today's point of view, we had a number of data points which moved the market. We initially had Japanese data overnight, and then from early morning in Europe, I don't know if all of you are based in London or Europe or somewhere else, but we had PMI data for various European countries, in particular for Germany, which was the important bit, and also for the Eurozone itself. And that moved a euro. And as we know, if we have a bullish euro, okay, if we have a bullish euro, that normally impacts German DAX because they're correlated in some way. So I'll be talking about both in a little while. I'm just going to cover this very, very quickly and tell you what's going on, and then we can talk about these in a minute. Now, the other thing that happened today is we had a UK unemployment data, which came in at 4.3%, so in line with expectations, and we had average hourly earnings at 2.5%, so in line with expectations. And then on the other side, we have euro dollar, which is weakening at the moment. So from the economic calendar point of view, and something that will be moving the market for the rest of the day, and also I'll cover tomorrow and Friday, is coming from the US side. It's from the US side. So we will get a US PMI data at around 245 in about, sorry, I don't know if this is the, yeah, 245, 15 minutes after the US markets open. And then we have existing home sales at 3 o'clock. And probably the most important economic data point for today would be crude oil inventories, which is coming at 3:30 UK time, 3:30 UK time. And that will quite likely move not just WTI crude, but also Brent and some commodity currencies like Canadian dollar. Now, so before I go into all of this stuff and start talking to you about what's going tomorrow, and tomorrow is going to be a big day for euro with ECB rate decision and closely and eagerly anticipated press conference by Mario Draghi and ECB at 1:30 in the afternoon. But I'll talk about it in a bit. So what we are going to talk about first is we're going to talk about cable, a little bit of FTSE, and then we're going to go and talk about what's going to happen with crude oil and euro dollar and other stuff a little bit later. Okay, so let's talk about cable because everybody's looking at this right now. So sterling dollar is a really nicely uptrending at the moment in daily time frame, 4-hourly time frame, 1 hour. So intraday time frames are really, really uptrending now. The important levels to watch from the upside, it's encouraging to see sterling dollar above 140. The big level that everybody was talking about was 139. Above 139, it appeared to be quite bullish with a nice breakout as well. So the first levels that we should be keeping an eye on, and this is a monthly time frame, and I know you cannot trade in monthly, but it's important. It's important for us to realize why that 139 level was such an important level, because it's been tested over and over again. And I'm going to make my chart much smaller. Apologies, maybe it's too small, but like this. And you can see that that level was tested here as a significant low. Then cluster of these two lows with the buying pressure, lows, lows, lows. And us traders, we tend to remember the levels which have been, sorry, challenging if, I only trade 4-hourly charts. I want to know what's the most common RSI to use for when the market is moving sideways. Percy, the most common RSI setup is 14 period. That's the basic calculation in any time frame. Okay. Now let's just go into this. So nice initial support currently at the previous resistance levels at 139. So this is the weekly time frame, and what we have here, we have this orange line which happens to be our 200 period moving average. So this is why 200 period moving average is important, because other traders will be looking at that level and saying this is the level where the price might find a little bit of resistance, or it might consolidate if it goes to that level. Now, this is a very much a longer term time frame chart. I would also apply a basic fib from this swing high to this swing low to give me indication of some possible resistances. And for those of you who understand what the fib is, and if you don't, please ask. I'll try and explain it very quickly. Maybe I'm trying to do too much in a very short period of time. You can see that 61.8 retracement of 144 falls into the same level, or at the same level where the 200 period moving average is currently. Okay, so that's a double confirmation. There's a cluster of support here, either from the fib point of view, from this cluster of the previous lows and highs. So there is a supply and demand zone here, and also that fib retracement. Now, if we go down to a daily time frame, we should really be referencing something that's so let me just go back and do that. So this is the daily time frame, which is currently creating the sequence of higher highs and higher lows. In daily time frame, sterling dollar is uptrending from the breakout of this inverted head and shoulder, or a triple bottom with a breakout and a retest. And then every time it created a continuation pattern, which was broken, it went up higher in a measured move fashion. So what I mean by that is, for those of you who understand market symmetry, you would see that this is the same number of points. The same number of points from here before the consolidation, and so on and so on. So these continuation patterns are really, really important to pay attention to, as long as the price creates higher highs and higher lows and creates above rising, hopefully multiple moving averages. So at the moment we are creating this exuberant, almost parabolic move based on the change of sentiment and the good news. But this is, I think somebody mentioned this already, it's also linked with the US dollar weakness, not just the sterling strength. So from the end of day point of view, sterling dollar appears to be bullish above this 139 level, with a currently major resistance at 141.33. If that resistance level doesn't offer a opportunity for something like this, maybe a sideways consolidation of some sort. Apologies, let me just do that. A sideways consolidation here before we see another push higher. So that will be a sequence of higher highs and higher lows. If that doesn't happen here, the next logical level of resistance is up here at 142.58, 143.89, even 146.10. Now, majority of the people trade in a shorter term time frame. So for them, if this is a 4-hourly time frame, and people who are trading in 4-hourly time frame must check weekly and daily in order to identify the trend. So if weekly is uptrending and daily is uptrending, then in 4-hourly time frame, the only way the only way to trade in a direction of the prevailing trend is to either trade a breakout or trade a pullback into support, and buy that overall prevailing trend, and increase the probability of potentially being right by doing so. If you're shorting 4 hourly, it could be a counter trend decision, and you should be aware of that. Okay, so the 4 hourly, we really have a couple of levels to work with. We have this level here, which was the previous low, and it's fairly close to this 50 period moving average, sorry, 20 period moving average. I normally hold a pullback until it falls below 14-day moving average. Good policy, you think, Mike? Allows me to ride for several hundred pips, even thousands sometimes, but can be nerve-wracking at times. Any thoughts? I'm using 20, 50, and 200 period moving average because that's what majority of the people would be referencing to as well. But if your strategy is working for you and you have an audited trail of successful trades by using the 14 period moving average, stick with it because it's working for you. Okay, Rikshan is saying, I'm looking at 4 hourly chart. How does the 3MA reflect the trend direction for me? Yeah, I've just said it. If the price action is trading above rising multiple moving averages, that's confirming the uptrend. If the price action is below falling multiple moving averages, that's considered to be a downtrend. But your 4 hourly time frame is your trade time frame. If you're looking for a confirmation by candle or a pattern or an indicator of some sort like stochastics or RSI in your 4 hourly, that's your trade time frame, entry and exit time frame. Your prevailing trend is identified in daily and weekly. This is your trend, and this is your trading time frame, Rikshan. Okay, so hopefully this is all clear. Now, let me go down to an hourly and see how this works out. In an hourly, we have a sequence of these highs here. We have a price action trading above rising moving averages, and the price is breaking out higher. So it really does appear to be very, very bullish going forward. And even if you go down to a 15-minute time frame, this trend line here and 20 period moving average here, 50 period moving average here, 200 period moving average are all offering logical levels of support at the moment. The only other level of support that could be of interest is cluster of these lows here. And if the price, for whichever case, consolidates and comes back to this level, intraday traders would likely consider this level to be a first level of support. Hopefully you can see this as a blue, and hopefully you can see this as kind of amber or red. And what I'll do now is I'll do that and change it into a plum or red or something. Here we go, plum. So we know this is the resistance, we know this is a support. So from much shorter term time frame, this is still uptrending. We had a consolidation here as well, which was broken. Then we had a short-term consolidation here, which was broken. And from the symmetrical point of view, this many points extended up. It's bringing us to these levels where we are at the moment. So some traders who have been on the right side of this trade, who've been bullish, might be looking to potentially start taking some profits around here unless we see a continued weakness in the US dollar. And then something like this could possibly offer a nice opportunity for them to engage against. So previous resistance becomes a newly found support, and so on and so on. So fairly nice and decent moving market, very bullish at the moment, supported by good fundamental data, economic releases, good news. Sorry, let me just switch my squawk. It's coming in. I don't know if you can hear it or not, but okay, sorry, just switching my news feeds. Okay, So all of this that we were talking about is actually very much related to this, which is dollar index. And dollar index will be affected by what's going on in the economic calendar tomorrow. And also, sorry, excellent. So the economic calendar that we were talking about for tomorrow, which is Thursday, is pointing to that ECB rate decision and then the press conference at 1:30. So that's going to be the big event for tomorrow. We have some housing data in US, but really from the dollar point of view, the major day for the dollar strength or weakness or dollar volatility is actually on Friday. On Friday, when we get US GDP reading. So currently forecast is for 3%, and we are also getting durable goods orders. So that's going to come at 1:30 in the afternoon UK time, and just kind of an hour before the US markets open. And these figures will likely impact a US dollar currency volatility across all of the other currency pairs, but also in relation to precious metals like gold and silver, quite likely in relation to some commodities like crude oil as well. And in turn, it might have an impact on US equities like Dow Jones, S&P, and so on. So that's the big data point for Friday. We were talking about sterling dollar as well earlier, and on Friday we also have UK GDP reading at 9:30 in the morning. So Friday, in relation to sterling dollar, we have GDP for sterling, so euro sterling, sterling dollar, sterling yen, anything sterling will be affected, but also FTSE. And then on the other hand, we have a dollar index, which is making currently significant lows. And let me just show you what I mean by that. So this is dollar index. Do you guys know what dollar index is? Okay, let me just check. I don't know if all of you know what dollar index is, but very briefly, dollar index is an index that follows the movement of US dollar currency against the basket of 6 other currencies. It's traded in futures as a future contract. So this is currently front-running month. Excellent. Now, this financial product is hugely important for us to watch because it's following the movement of US dollar against the basket of other currencies, mainly against euro, then against sterling, Swiss, yen, Canadian dollar, and Norwegian krona. And there is a reason why these 6. Okay, so against euro because of the sheer velocity of euro currency in circulation, and it's a very liquid currency pair to trade euro dollar. Then sterling, it used to be a former world reserve currency. Swiss because they are neutral, Japanese yen because of the Japanese economy and so on. Canadian dollar because this is a currency commodity and they're also North American neighbors, and Norwegian krona because it's rock solid. These guys are sitting on gold and oil. Now, so the movement of this financial instrument is closely watched by loads of people. Not just currency traders, but people who trade commodities, people who trade equity indices. And dollar index is moved by something that Federal Reserve says or does, or possibly indication in change of their sentiment with minutes or towards rate decision. It's also impacted by inflation data, GDP, that kind of stuff, consumer spending, housing. All of that stuff is moving dollar index. Now, let me just show you why this is so important. Dollar index is coming to 9-month lows, 9-month lows levels. And these levels are actually hugely important because they are previous highs and lows. So below 80, below 90 and 89, 70, a dollar is coming into a fairly dangerous territory. If we take a basic fib from this swing high to this swing low, we have 50% fib retracement here. If I take a slightly different swing low, which is this here, to the same high, we are getting 38 and 50%. So there is a zone of interest here that traders are watching. We're also noticing that dollar index, this is the monthly, this is the weekly, is trading in a fashion where it's creating a sequence of lower highs, and it's also trading below multiple moving averages. There is your 20, there is your 50, and there is your 200 period moving average. So there is some selling pressure in dollar index. Which is a bit puzzling for a market participants, and it's reflected in euro strength, for example, in euro dollar, because if we believe that Federal Reserve will stick to their 3 rate hikes policy for the 2018, and ECB will very likely carry on with continuation of the QE and bond purchases, and then at some point next year they might choose to or decide to hike rates. This should normally indicate euro weakness against the dollar, but it seems to me that market participants and big banks do not believe that that's the case, and they're saying that these 3 rate hikes in US are almost priced in. Okay, so this selling pressure is manifestation of that sentiment change and a firm belief that these 3 rate hikes are already priced in. So what I'm watching for here is I'm watching for any signs that dollar index is bottoming or finding support at these levels. If it doesn't, then that will indicate a fairly substantial bearish sentiment in play, and bears are in control, especially below this significant lows. So this 91 area was really important level of support, because in the past it represented a potential inverted head and shoulder pattern, with the neckline being here, with a breakout which wasn't sustainable, and then the price kind of dipped lower very quickly. So this selling pressure is very much telling below 20, 50, and 200 period moving averages in daily. 4 hourly, it's pointing to the same or very similar scenario. So we have this area here of substantial consolidation, which was a previous support. Now, if the price does stay where it is and rallies into this zone, it's likely that traders will be reacting to it in a bearish way, because that previous consolidation did not hold support, and then these lower levels that we are talking about, 89, 70, 89 is another level that's quite important to keep an eye on dollar index. Below 89, that will open up the way for a potentially further downside support towards 88, 50, even 88 levels. And if that happens, that would normally be seen as a fairly bullish for gold, fairly bullish for cable, fairly bullish for euro dollar, bearish for dollar yen, bearish for dollar CAD, bullish for Aussie dollar, and so on and so on, because it's inversely correlated. I don't know if I'm explaining myself correctly here. I'm assuming that you understand what I'm talking about. So the dollar index can move 20, 30, 40 points in one day, and there will be a big move. And then on the other hand, you can have 100 points higher in euro dollar or cable and so on. So it's very important level to keep an eye on and watch. Let me just check. Was this okay for you guys? So keep an eye on dollar index. Also, that's putting pressure in dollar yen, and we have great, excellent, Michael. Thank you so much. Thank you, guys. So let me just put it back to where we were before. We were talking about cable. We were talking about dollar index. Let's talk about euro dollar as well, because loads of people were asking about that as well. Euro dollar is rallying higher, guys. There's no two ways about it. Now, this is monthly time frame. Yet again, you cannot trade in monthly, but when your intraday time frame price comes close to a monthly major previous lows, and also 200 period moving average or falling resistance trend line, it has the tendency to consolidate for a bit. Okay, because anybody who was sitting in a bullish side here is likely seeing this area here as a potential profit target zone. They might be looking to take some profits, and so on and so on. The other thing that's important to keep an eye on as well, from the economic calendar point of view, guys, this is what we talked about earlier. On Thursday, that's tomorrow, at 1:30 in the afternoon. Firstly, we have this ECB rate decision at 12:45. So no rate hike or no change is expected from ECB. But the press conference, which happens at 1:30, will be closely watched, because that's when Mario Draghi might say or do something in verbally, not physically, but verbally. Normally, when we see euro dollar at this 123, 124 levels, these are uncomfortable extended highs and valuations for euro against the dollar, and therefore it's making European companies manufacturing not competitive in relation to some of the other regions, in particular in US. And Mario Draghi had tendency to verbally intervene at these levels and either support or talk the euro down. So I would be closely watching at 1:30, because it's very likely that tomorrow volatility could increase around that time. From the technical point of view, guys, let's go down to a daily. This is clearly uptrending market with a sequence of higher highs and higher lows. There is no two ways about it. We have a supporting trend line, supporting euro dollar moving higher, and the price action is creating a sequence of continuation patterns, breakouts, continuation pattern, breakout, and so on, and it's moving higher. All of this looked as a topping triple top and head and shoulder for a while, but then the price came to the support line and moved higher. So from the support and resistance points of view, you really need to go up here and find any previous highs and lows and plot these lines, which will potentially indicate to us where the price might find some resistance. Support is much easier to find. Okay, so these are our resistances at the moment. 123.30. Above that we have 124, purely because it's a round number. Nothing wrong with it. People keep an eye on round numbers. What he says about QA will play a part. Yeah, absolutely, Michael is right. Not just what he says, it's he might say we'll just carry on with QE, we'll keep monitoring the situation, and we might amend our stance according to the data that we receive, basically keeping an option open for an extension of QE if required, or something like that. Tends to sit on the fence. Yes, absolutely. Michael, thank you so much for sharing. Now, what's happening here is, so these are our resistances at the moment. 124, I would be keeping a close eye to that as well, because it's a round number, and loads of people, and especially larger institutions as well are keeping an eye on these round numbers, either from the resistance or a support point of view, and they might have their limit orders or stop loss orders or any kind of orders around these round numbers, and we should be aware of them. We should be, because they're milestones and so on and so on. Now, if we go down to an hourly time frame, the current support is clearly defined by these previous highs here. So let me just go and do that and put that support here. So this was previous resistance, and now it's becoming a newly found support. And we have a support down here. So these levels would be offering some sort of support if for whichever reason we see a bit of a consolidation in any way sideways. The trend line might be in this place here. Any kind of pullbacks, any sideways consolidations, triangles, falling wedges, flags with the breakouts would likely find some buying interest around this zone here by bullish traders who are looking to test this trend line and react to what Mario Draghi might be saying. Where is the blue? Okay, hopefully this is the one. I don't know. Okay, so something like that, but be prepared. Volatility could increase. He might say something, and then if we see something like this and the price dips below this initial support, and this is 1 hourly time frame, and the price does something like this, creates an oversold bounce back into previous support, now newly found resistance, it would open up the way for the retest of this zone down here, 123, 122.80, and that zone would also correspond quite nicely to a fib retracements of 38, 50, and 61.8. I'm drawing this fairly loosely because I don't know if this is the ultimate high, or is the high going to be here or here or here. I don't know. Unless this candle finishes or this trading day finishes, I have no way of certainly saying where the ultimate top for today's trading range is. So I'm basing it very, very loosely, just to indicate that something like this could potentially target this level of support as a fairly important level of support from the downside point of view for the euro dollar. Now, let me just go into something else very quickly as well. We are looking at FTSE. Since we were talking about cable, let's talk about FTSE as well. Now, FTSE in end of day time frame, it's pulling back, and this is purely because it's correlated to sterling dollar. So we have a stronger sterling dollar, and then we have a bearish reaction in FTSE because they're inversely correlated. Okay. Can I ask what is currently making the yen rise? Yes, Ben, Japanese data overnight, and also dollar weakness, if you are referring to dollar yen. If you're referring to dollar yen, it's a US dollar weakness. We talked about this a little bit earlier on when we talked about dollar index. Okay, thanks for asking. Thanks for asking. So let me just go back and talk about FTSE very quickly, because I don't know how many of you are actually trading indices, but it's a good one to keep an eye on and watch, because obviously that UK GDP will likely impact what's going on with FTSE as well. So FTSE is quite nicely uptrending, but we are coming to this all-time highs, and 7,687 was the monthly close. From the weekly or daily highs, we are seeing this 7,000 790, call it 7,800. It was a few points shy away from this 7,800 level that would signify a nice and round number as well. So let me put this as the resistances and may color them red so that there is no confusion here. Now, keep an eye on FTSE, because FTSE is currently painting something that could look like a bearish flag from the intraday point of view. So keep an eye on that sterling dollar. So if you go to a 4-hourly time frame, we can see that the initial uptrend was lost. And we can see that there is something that appears to be a potential double top here into this 7,790, 7,800 level. So nice and round number and so on. And this corresponds very nicely to a rise in sterling dollar as well. So from the downside point of view, a cluster of these previous lows would offer some level of support, and it would definitely be of interest. So we have this sequence of the lows at 76.87, below that 76.30, and then below that we would have this high and also this 200 period moving average, 75.55, 75.33. So if you go to a longer term time frame, I would also reference these highs here as well as a major level of support. So from the downside point of view, let me just insert the shape here and put that in. So this here would definitely be a major point of interest to the downside, because that's weekly and monthly highs and so on and so on. That's that breakout level and so on. From the intraday point of view, if you go into an hourly or lower, we can see that this appears to be a double top with a neckline that was lost. So basically some profit taking up here into this resistance area that was signified by the round number, cable rallying higher, and then we saw a pullback in FTSE. So what's happening here is this potentially looks like a bear flag formation or a rising wedge. So basically a bearish sideways consolidation that created a first significant lower high, and that lower high is actually at 50% and 61.8% of the fib. So this is a nice retracement of this down move. Sorry, when did this webinar start? I was advised that it's starting at 15:30. Mike, this started at 12:30. 12:30 UK time, GMT. It will always be at 12:30 for the next few weeks, and then we might try something in the evening. I don't know where you're from, Mike, but it's 12:30 UK time. 12:30 UK time. Welcome. Ask any questions if you have, and I'll try and cover them as well. Okay, so what we are seeing here is from the FTSE point of view that we have this sideways consolidation, which appears to be a little bit bearish in nature. So from the intraday point of view, these levels here would offer a logical resistance area for now. And as long as the price stays below this breakout level or a loss of support level, bearish traders could be incentivized to take this many points and, oops, sorry, I've moved the wrong thing. Okay. And add it lower, and that would give them the measured move. Some people might refer to this as A, B, C, D, E, or 1, 2, 3 retracement, or whichever way you want to call it. It's nothing to do with Elliott wave or anything like that, but it's just a symmetrical measured move. And as such, it's definitely pointing to a significant support level around 76.30. So the initial support is cluster of these lows, And if this bearishness continues and something like this develops, then bears are still in control. We have a low, a high, a lower high, another lower high, and then the price could carry on doing that, especially if we see this exuberant continuation in sterling strength as well. Alternatively, and there is always alternatively, and the data that could possibly trigger this change would come in on Friday with UK GDP, and the reaction, if we see a breakout above that falling resistance trend line, that would negate the bearishness, but the price will need to create a daily close above here. So daily breakout above here would negate this bearishness, and then all of this will become a very nice bullish continuation pattern, and the price could spike higher to retest upside resistances towards these highs here at 77.42. Above 77.42, 77.60, above 77.60, 77.90, 77,800 to the upside. We did multi-time frame for FTSE. Is that all okay, guys? Please, my question. What is your question? Temi Taupe? Please, my question. I don't know where your question is. Sorry, Temi Taupe. What was your question? What is moving euro dollar market at the moment? We covered that already. Yeah, I covered that. At 45 and 1330. Did you get that? Sorry, I talked about euro dollar already. Just making sure that you've seen it. Like your multi-time frame, Patrick is saying, like it, you did cover it, Philip. Excellent. Now let me just cover something else. Oh, actually, 1:30, guys. I'm having fun, but unfortunately, we need to stop. We need to stop the broadcast, the webinar. I could talk to you all day, guys, and you are more than welcome to come and join us in TraderCast. Go and speak to your account manager at FxPro and ask them if you can access a TraderCast as a complimentary trial period. It's free for you. Normally, TraderCast is membership based, but for you guys who are live FxPro clients, you get preferential treatment. Go and speak to your account manager and ask them to contact me, and they'll tell you how to get in touch with me, or you can email me as well. Hopefully you found this informative and beneficial. The next broadcast or webinar is scheduled for 12:30 Wednesday next week. So each Wednesday at 12:30 UK time, we have the webinars. I wanted to cover so much more. Thank you so much for your questions. This is brilliant because, you know, when you're asking questions, you're helping other people, but you're also helping me as well. And if we start generating the same or similar group of people at the same or similar time, we'll know roughly what you need to know, and then we'll make sure that we cover everything that could be of interest to you. Just to summarize everything, dollar weakness across the board. We have a gold nicely moving higher. US equity indices are bullish at the moment. We have FTSE under pressure with a very nice strong sterling, and euro sterling is under pressure, guys, below this very important spot 88, and especially below 87.50, which is the cluster of these lows here of the consolidation. So if the euro dollar does, euro sterling lose spot 87 area of interest, and I'm just going to finish with this 87, then bears are in control, potentially indicating that further downside support could be towards 86.50, 86, 85s, 84s, and that would indicate that this sideways consolidation is coming to an end, and it's pointing to a weakness in euro against sterling. Lovely talking to you all. Thank you all very much for watching and listening. Stay safe, happy trading, and I'll speak to you all next week. Bye. Bye for now. Mike is saying, is this available elsewhere? Yes, daily, twice daily in TraderCast, 9:30, 11, and then 13:30, 15:30. But speak to your account manager at FxPro, and they'll be able to point you. Thanks, guys. Thanks for watching and listening. Talk to you soon. Bye.